Good afternoon, everybody. Happy Halloween. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I got out of HLX today. What a great trade that was. Shout out to Matt Polyak for putting it on the radar. Been riding this thing. First was getting involved in this little breakout back here on August 23rd, I think. I think that's when I first got in. Had a $7 target on it. Got the $7 today. It's super extended to $7. Figured it's a right time to book that one. But let's talk about the market. So you can see here, just looking at your chart of the SPY, intraday price action today, real tight, sideways, choppy, inside day here for the SPYs. Qs similar, inside day. Qs had a little more relative weakness today, and the IWM once again is where your relative strength was. So you have an inside day for the SPYs, an inside day for the Qs, not an inside day for the IWM. That was able to give some upside continuation. I really do like when the IWM is the leader. Usually the rest of the market tends to follow through. As of the close here, or as of I guess 12 minutes after the close, the S&P is down 0.75%. The Nasdaq is down a little over percent, and 1.2 or so, and the IWM actually closed flat. So again, highlighting the relative strength here from the IWM. Very, very impressive. Very impressive. So yeah, over to the daily charts, right? So we were set for a gap down this morning in the market. It's technically a common gap down, and that is after Friday was just a tremendously strong day for the market, led by the Apple move. I think a lot of that Apple move was unwinding of hedges, bearish bets that people had going into the print for Apple that took the entire day to get unwound when it was not kind of the end of the world disaster, which, it's funny because of all the flow that we saw, and I don't have data to back this up, it's just kind of from what I remember seeing and eyeballing, all the flow that we've seen coming into the reports, obviously Facebook was a disaster, Amazon was a disaster, Google, Microsoft, not great. It seemed like the one that had the most amount of bear flow coming into the prints was Apple, and Apple was the one that, I wouldn't call it a great earnings report, but it was not a disaster like some of those others. And then they really had to kind of unwind those on Friday. It led to a great move. Apple had a pretty big gap down this morning off of the China news that one of their main factories is, I don't know if it's totally shut down or partially shut down, that produces the iPhone 14. It's right after we saw in the earnings report that Apple said that the demand for the iPhone 14 is really good. So that obviously negatively impacted it, but on an intraday trading basis, even though it gapped down probably more than the rest of the market did on a percentage basis off that news, Apple also did pretty much absolutely nothing today. So again, from a game plan perspective, we had this gap down. That's actually a good thing. You want that after such a strong close on Friday. Your short-term tactical, it was big time in the red zone after such a big day on Friday. So what you really want is digesting, and one of the ways in which the market can digest, it's through price. So that gap down is actually a good thing, I think, if you're bullish. If we gapped up this morning, sure, it's nice. If you're already long, you can book some extra profit, but it would have been very difficult to expect any sort of upside continuation into a gap up. And maybe the flip side of that is it would have been a better opportunity to book profit or look for shorts, though on day 2, I don't really want to be looking for shorts as much as like day 3 or day 4. So we had the gap down this morning, and the game plan that we discussed in the morning meeting today was to kind of go a little bit in wait-and-see mode in the beginning of the day. The expectation was for us to be choppy and sloppy, especially for at least the first half of the day. And then there was a thought process that we had just based on how that short-term tactical can be satisfied, and based on the 2 sets of 3-day moves that we saw back in July, and the similar pattern that we're seeing kind of here in October of 3 days up, some rest, continuation. The thought process was if we could get a half day of digestion, and then we start breaking highs around lunchtime, that could lead to just some systematic buying coming in, a little bit of kind of an upside grind. And that all looked like pretty much on point when we were coming into noon. Right, we had our gap down. Opening price action here is not great. We break lows. Even as we're breaking lows, and you could certainly make an argument that small time frame we're looking bearish here at around 10 a.m. or 10:15 or so. That's when I was saying I actually don't like shorts. Even with the Qs here, I know some traders on the team mentioned that they really wanted the Qs to hold 276.50. I actually said 276. I was looking to give it a little bit more space, just because liquidity's been so low, volatility's been so high, and it's also, I think, where the 21 EMA is on the daily chart is what had me looking at that. Yeah, 276.17. So it's like, we could overshoot 276.50, but I really want us to hold 276 and then maybe able to recapture. So that like all worked perfect. And if you took any longs off this low, which I had just gotten off the radio, I went to the bathroom super quick, came back and missed the actual low. I think I called it out on this bar. I was a little bit late kind of typing into the chat. But if you this is what I'm always talking about, right? And this is one of the things that's really hard on trading sessions like today, as far as positioning yourself. Traders have to remember to look at the big picture on kind of where we're at. Because if you're only hyper focused on the small picture, you could really be looking at the SPYs and the Qs kind of as they were putting their lows in and expecting further downside price action. But when you think about the bigger picture context of where we are after Friday's candle, and then the fact that the IWM was the leader, if the IWM was the weakest index, I would have been significantly more concerned when the Qs were breaking 276.50, but they weren't. The IWM was a monster here. It barely broke the opening low. It was super strong pre-market. It stayed strong all day. And again, it's just been a really consistent thing that we've seen throughout this calendar year, that if the IWM is holding up, SPYs and Qs don't really break down. And the opposite too. If the SPYs and Qs are trying to hold up and the IWM is weak and breaking lower, most of the time the SPYs and Qs end up failing. I feel like Friday was one of the very few exceptions to that we've seen all year. Which I kind of tossed up to a little bit of mean reversion, which you can still see that there's like an outstanding difference between your daily chart on the IWM right now and your daily chart on the NASDAQ or the Dow even. The Dow, I don't really ever look at the Dow. There's only 30 companies. I feel like it's just like probably the worst picture to look at to have a general understanding of what the market's actually doing. That's why I like SPY, Qs, Russell. But this move in the Dow, it's just been incredibly, incredibly strong. But the IWM has been the one to look at, and that was strong today. So if you're looking for downside continuation, at 10:30, you weren't getting it. And then we were breaking up, right? We were breaking up around noon. The SPYs had broken their opening high. It looked like they were going after the gap fill. I think I even said that at lows, that we could easily still break opening highs. The Qs weren't quite there, but they were catching up. The IWM looked fantastic, and I was thinking maybe we could go into one of those upside grinds and just be similar. We're trying to do, those 3-day moves that kind of come in the afternoon after a really big day one. And then we got hit with that negative news that came out of the White House, where they said that they want to be able to tax these energy companies in a bigger way or whatever. And you can see how heavy that wrecked the XLE initially. It actually broke down the whole market kind of to some degree, and it didn't seem super significant to me as far as the market goes. And I remember seeing, even as we broke down, like, I wonder if the Qs actually will be able to come in with some strength and be able to just negate that really quickly, which they did, but then there was no follow through. So that news did seem to kind of take the wind out of the sails in the market a little bit, but we just turned into an inside day, which that was the other possibility that we were really looking for today. Possibility one was sloppy, choppy first half day, break of new highs into an upside grind. Possibility number two is just an inside rest day. And that's what we got. And inside rest days, by the way, we want these. These are the type of days that we want, even if it makes today difficult from an execution perspective. It helps to be able to set us up. It helps to satisfy any short time frame upside extension that the market has right now. And more importantly than any of that, for us is kind of tactical, traders or portfolio managers. it helps to give us clarity and set us up a little bit. So I like when these tight inside days come into play, because now tomorrow we can be analyzing the break of the rest day. If we're breaking up, you could be looking at like a 1, 2, 3 type of situation. If you're breaking down, that's one of the ways in which positive Maribozus sometimes get negated, and you could say that we're going right back into our kind of normal bear market potentially. So it certainly gives us some clarity. The only thing I would say, just put a little grain of salt into it, is that we do have this Fed meeting on Wednesday, which will certainly be market moving. I think it's pretty much all but a guarantee that we're going to see a 75 basis point hike again on Wednesday. The big thing that's really going to move the market, and we'll talk about this probably a little bit more tomorrow afternoon, the big thing that's going to move the market is going to be any potential language on not the Fed pivot, I don't think, so much as the Fed pause. The Fed, once again, and we've seen this all year also, they're really trying to walk this fine line between not allowing risk assets to really increase, because that kind of creates that wealth effect that makes people go and spend, and that's not going to bring down inflation, but also trying to make sure that things are not a complete and utter catastrophe. So we've seen this just all year. Every time these big rallies come in, you really see that heavy hawkish hand as far as language coming in from our Fed members. We saw that in a big way in the second half of August after this huge rally. They were as hawkish as they possibly could be. And then, just as we're kind of getting down to lows here, you see that Wall Street Journal writer who seems to be like the Fed whisperer or whatever, coming out with language on the pause that kind of helps to create this bounce and helps to create this stabilization. And that's as we, internally, our team and a lot of other, I guess, market analysts out there have been discussing that the degree of hikes has just been so insane in such a short period of time that I really think it makes sense just to take a half step back and see what actually happens with inflation over the course of the next 6 to 12 months, because I don't remember what the statistics are off the top of my head. We've seen them. I'm sure we've seen them in Pat's note and here in the VTF on what the lag time is historically between raising interest rates and the effect that they actually have on inflation. I feel like it's like a 6-month or 8-month historical lag. I don't remember exactly what it was. But we've just hiked and hiked and hiked and hiked and hiked without any visibility as to, what that's actually going to do. And we're still hiking. And I still think we're going to see 75 basis points this week. So we will see how all that plays out. So we got a little inside day today. As far as being a little bit more tactical for today, we discussed the possibility of the market being choppy and taking a rest for at least the first half of the day, but potentially growth stocks catching a bit of a bid. And there was certainly some truth to that. And some of the names that we had on our radar today included, actually I'll just leave the 5-minute charts up, included like Robinhood. That Robinhood, first 12-minute move was really insane, and then it gave a 100% failure of that move, 100% plus retracement of it. DKNG gave a really nice opening move, unfortunately broke that opening low, which I think shook some people out, and then stayed strong and was able to really kind of work its way higher. I know Snap was one I was looking at off the open, had a fantastic first 5-minute bar, and that one also gave a 100% reversal. Upstart, incredible opening move. This is one we were looking at. Eventually gave 100% reversal. Rivian, very difficult, a lot of volatility there, but still, the strength was certainly there. CGC and Tilray got brought up. I guess they got hit by news a little bit midday, but they actually held really well and gave really large percentage moves. So hopefully somebody caught that. Rivian I think was mentioned, but it's similar. Actually, I already looked at this one. Roblox is what I meant to type up. Roblox was weak right away. Oh, Shopify, that was another one. Really strong off the open and then kind of just wilted a little bit. So it certainly was the right idea, the right thought process to be looking at these. There was a lot of relative strength there pre-market. And again, it's not unusual. We've seen it happen before when the market's becoming more bullish, that when the market needs a little bit of a rest, half-day rest, whatever, that some of those growth names can actually squeeze without the market, and then the market catches up a little bit. But I don't think that the TLT action today, that the interest rate increases, helped any of that at all. And we'll see. I know a lot of you guys were, intelligently discussing that this could just be end of the month rebalance flows, especially when you look at, if the bond market closes for that type of stuff at 3 o'clock, and then this, that's pretty much the low or shortly thereafter, and then you get this really big rally into the close. But this TLT selling off of that, and the dollar strength certainly was not helping those growth stocks, and nor was the market. But we expected that, right? We were expecting that if you're taking any of those growth stocks for momentum trades, that you might be fighting the market, and that's just part of it. But I still think that was the best stuff that was out there this morning. A lot of them gave really, really good opening pops, and as long as you didn't chase, like a Robinhood as an example, if you had good pricing on it, even though this thing 100% failed, there should be no way that you lose money on it. So I was long AMC at one point today for a squeeze. I think I bought $6.81 after I put that low in. Caught this great move up to $7.21. I think my best sale was like $7.18 or something like that. And then this thing gave 100% reversal and stopped me out. But guess what? This is a failed trade that I made money in. And that's what we talk about. You put yourself into these positions, even if the trade fails, and you can still make money on it. That's like a win-win, because if you can just get them to work every once in a while, you should be making real money for yourself. And you all know I don't believe in AMC at all as a company. I was saying when this thing was a $70 stock, that's a $3 stock. I'll still say here at $7 that it's a $3 stock. But I'm not afraid to go long something I think is overpriced if the momentum's there, if I can make money on it. So I traded that AMC today. I traded this Peloton. This was another one actually that has some squeeze potential. I actually trailed my stop, I trailed my stop and I got pushed out into this pullback. If you're long versus the low, the opening low, that one actually held all day. But this is another one where this is technically a failed trade for me, and I made money in it, so I'll take that all day. Whatever happened to that Neo trade? Because this one I didn't take. Yeah, Neo trying to give a little bit of a pop here, but then that did this low hold? 59. Is this low? 59. Actually, the stop loss held by a penny here, but didn't end up giving any real follow through $10. But just a few trades that were called out kind of intraday, where they didn't really necessarily work. But if you game plan properly and execute properly, you should actually still be making at least a little bit of money on them. And then FANG we thought was going to be out of play today, and it was. You look at where Microsoft got to on Friday, into its equilibrium zone. It needs a rest. It took a rest. Google, exact same thing. Bounced almost back to that 80 MA on Friday. It needs a rest. It took a rest. Amazon, I wanted to see that if Apple could regain some strength, if Amazon could fill this gap a little bit more. But, there was no strength in Apple. These names are just out of play. Amazon didn't really give too much additional further upside follow through. But keep in mind, this thing was at $88 after hours on the report. Apple we looked at already, and Meta is just an absolute piece of garbage. Massive gap down on the report, one inside day. The inside day on Friday really showed the relative weakness of the stock, and then it just broke down further. I did not like the short today, and I still think that I don't like the short, even if it would have worked, just because of the degree of extension. I'm long the stock. I've started to build in very small. I'm very small. It's just kind of building out a feeler type position for myself. Though I did start to get a little bit heavier between like lows and 95 today. I added a little bit heavier, but you need the price action and confirm it. There's somebody or somebody's liquidating just massive amounts of stock in this Meta. That's why even when it wanted to go on Friday, and the market was going on Friday, and this thing was like getting above 100 on a couple occasions, and would see a little bull flow coming in and would start looking good, it was just running into this wall of selling of someone who just wants out. And that selling just continued today, plus anybody now who bought the last couple of days is out of the money, so that could be further puking. But I don't like this short when you've got this degree of extension in here. And I still look to this company, even though I am not necessarily a believer in the metaverse, and I hate the degree to which they're spending on it. It's kind of insane to me, actually. You can't ignore the fact that this company is just an absolute and utter cash flow machine. And at these prices, you know, they've got buybacks. Google's another one that's got a buyback. These buybacks should be coming online again at some point relatively soon once the blackout window ends on that around the earnings reports. And, you know, we'll see. But they're certainly helping to hold the Qs down. But again, inside day SPYs, inside day Qs. We'll see how those potentially break. IWM is where the strength is at, still a little bit extended. And yeah, you know, was not a ton to do today, but I feel like we handled it really well. That is all I've got for you guys. I am happy to answer any questions that you may have. So for some reason, right now my VTF is just a big white screen. Oh,
it's such a slow process.
There it goes. Has anybody said anything since 4:09? My VTF is doing something a little off here for some reason. It's bizarre. I think I need to. Can you guys even hear me? I hope you can. It says my voice is working. Oh, there it is. No one has said anything from 4:09 to 4:32. Okay. All right. Cool. Yeah. So happy to answer any questions that you guys have. So first thing is from Sebastian. Would you go long or short the break of this inside 5? What inside 5? Also today I caught Rivian and Upstart at the open, but both broke opening lows, so I gave back a ton of P&L. I consider that, yeah, this is exactly what we were just talking about. I consider that the daily on both looked great, so I only covered my risk. What do you think? Yeah, you know, I think that you did the right thing, Sebastian, for sure. They were the right stocks to be involved in today. They gave fantastic relative strength. I can't have beef with you being as greedy as you were, because being greedy and getting follow through is how you're going to get paid. And you still were smart enough. You weren't stupid greedy, right? You were still smart enough to be able to cover your risk. So once the risk was covered, then you decided to be aggressive and kind of really look for a home run in stocks that were relatively strong when the market's been looking a lot better. But you know, the market at the same time wasn't on your side, and unfortunately, despite those really big opening moves, and both those names were on my list today, by the way, they rolled over and failed. So I think that you did the right thing. Depending on your sizing, maybe you could have taken off a little bit more. But you know, if you had a game plan that said, hey, I love these daily charts, and I got the relative strength, I got the volume, the market's been relatively strong, you know, if you got all that kind of coming in together at the same time, then why not? You know, you only need that to pay you to really work every once in a while when you got all those layers of probability on your side and a good risk reward there to make a boatload of money. So I support it. I fully support it. Would I rather go long or short the break of the inside 5 in the SPYs? Probably long, but really you could take it in either direction technically here, because as much as the small time frame chart's looking bullish, and this is a good rest day today, we do have to remember where our big picture is. Our big picture is still in a downtrend. So in theory, you could take it either way. The only thing I'd be cautious about with tomorrow's session, and we could talk about it in tomorrow's morning meeting, the only thing I'd be cautious about with tomorrow's session is, you know, you could easily have like a false break in one direction or the other on the inside day tomorrow, and then the real move not happening until the Fed announcement on Wednesday. So, you know, I usually, as a rule, you know, the day before the Fed day is usually when I kind of pull back on being aggressive, because most of the time people who want to make any bets going into the Fed, they've done it already. They're not doing it an hour before the Fed. They're usually not even doing it the day before the Fed. So the day before the Fed can a lot of times be really sloppy, and then the day of the Fed between 10:30 and 2 is usually a day that you want to do little to no trading in that mid portion of the day, kind of save your bullets for post 2 o'clock. So would I rather go long or short? I think you take it either way, depending on which it breaks. I prefer the long side, but either way that it breaks, just keeping in mind that with the Fed on Wednesday, you could certainly get a false signal on that. From Brock. Could you explain your technical reason for your Amazon trade? I signed up for the VTF last week. Sure. Welcome. So I've been managing this position for a while, kind of scaling in and scaling out of it. And I did hold small into the report, which obviously didn't work out. Stock went from $111 to $88 after hours that day. I actually added, if you were here on the team last week, I was buying Amazon at like 88, 89, 90 after hours, and I really didn't trade it well. I was pretty upset with myself on how I kind of traded. I had some fantastic stock, obviously in hindsight, from some really, really good prices, and I ended up I think I was out of all of that stock that I added in Amazon by like 95, I think, which was still a good move for me after hours, but not when the thing hit 105 today and still has more room to the upside potentially through this gap. So that was kind of my, I held some into the report, and then I traded it after hours, but I didn't really hold anything that I bought after hours into the next day. That was just kind of a some day trades after hours, I guess. And then yesterday I was looking for some continuation to the upside if it could clear through that $100. I guess I should say on Friday, because I was bullish on Apple and thought that maybe this could bring this thing up through $100. $100 was the level, and then kind of get further into this gap, and that's exactly what happened. So for me, any Amazon trading that I did today was really just a continuation of kind of what I've already been doing and how I've been managing this position since the report came out. And yeah, today I didn't really do too much new. It was kind of just managing the position that I already have on. So I added a little bit back into this pullback, and then I sold a little bit kind of on the way up, and I sold a little bit kind of into the close. I had one good buy kind of at lows here. I remember we were looking at a few of these names, even though I didn't love them, when the Qs were kind of putting in their lows to see if they could bounce. Google was one that I was looking at, and I wanted to see this Google put in a higher low versus this low. It failed to do that. It was like really trying. Everything else was already breaking down. I remember we were looking at Apple when it had this kind of descending triangle here that built in the first hour or so of the day, and then it broke down here, and that you could short that. But what I was saying to you guys was I just don't really believe in the shorts here at this time of the day with where the market is, because of the big picture stuff and the IWM leadership. So I'm not surprised to see that this just turned into a quick downside tail. That was a failed move to the downside that then was the low of the day. So there were some okay spots there to do a little bit of adding in Amazon, Google, and Apple, but I don't think that you could or should be aggressive in these names at all today if you weren't in them coming into today's session. If you weren't in these FANG names coming into today's session, you probably shouldn't have traded them. And that was kind of what we were saying in the morning meeting, right? Is that these you look at especially Microsoft and Google with where they snap back to on Friday, right into this equilibrium zone again. What can you really expect on the upside if you're trying to buy Microsoft today? What can you really expect on the upside if you're trying to buy Google today? I guess Google, if the market was breaking highs and kind of going into that kind of up grind in the afternoon situation that we discussed, Google could be grinding its way back up to $97.50, $98. But I don't think that's easy trades. It's certainly not where the relative strength was. The day to trade these names, like we said Friday morning, was Friday, and then the day to not was today. Today was the day to potentially focus on some of these growth names, which ended up being the right place to focus on, even if the end result was a little bit of a mixed bag. So I hope that kind of helps, Barack. Again, because I don't necessarily have a direct technical reason on the trade today, because it's really just a continuation of the management of the position. But your question, I just want to point out, is phrased perfectly. That's exactly how the question should be asked, and that's how I ask it to traders who are telling me trades that they took. What is the technical reason for the trade, right? Because in order for a trade to be a trade, what do I always say? In order for a trade to be a trade, it has to have two things. It has to have the technical reason on why you're in it, and it has to have the technical out. And obviously, holding stock in Amazon like I did, into the report is gambling. I had traded it really well. It was up, good money in it from, where I had been. Like, if you remember, Amazon was one of the stocks I bought on the CPI day on the 13th. I had stock in Amazon from like 105 or something like that, or just above 105, I think. Caught this great move up to 120, booked profit on the way up. Then it pulled back. I gave back some open profit, but it's still looking good for me since this date. And for me, in that type of situation where I've done well with the position, I'm not afraid to hold a smaller, appropriate amount into the report, recognizing that it's a gamble. And in this case, the gamble did not pay. But for me, it's really still just kind of giving back profit. I think Amazon overall is one that I've traded really well. And then even though I could have held them better, I had some really good buys in Amazon after hours that day. So yeah, for sure, no problem. From Hemming, I was moving the Tesla long stop when it hit new high at 1445. 1445. It made new highs. Okay. I have a question. Does the price include the tail? Yes, it does. I set it to the 215 low. Perfect. Perfect. It should be low the bar. 228.02 is the low of the bar. The stop would be 221.01. Tails are important. Tails are important. They're part of the bar. And most of the time, a pivot point is created with a tail. Right? Remember what a pivot point in trading actually is. A pivot point is the spot in which buyers took control from sellers or sellers took control from buyers. The absolute spot where buyers took control or sellers took control. That's what a pivot actually is. So if you look at the 2:15 p.m. bar, the 14:15 p.m. bar, is the spot where buyers took control from sellers the opening price of 228.55, or did something actually happen at this low where sellers were in control and then buyers took control from the sellers at that low and drove it up? It's the second one. That ringtone was from the chief, from one of the compliance officers who is on the desk right now. And then it worked its way back up. That's the spot that actually matters. The actual pivot point. Hope that helps, Hemming. Great question. From Mike, after the Friday move, it seemed like a lot of stocks were extended from their ADMA, 100% agree. However, on smaller time frames, 5, 15, 30, the ADMA was almost at equilibrium. Do you have any general rules on how you reconcile the variance between the two from a technical analysis perspective? Yeah, another great question here. So as a general rule, your big picture is more important than your small picture. So if the small picture is telling me I could be looking at trades, like in some circumstances today, you could have even been looking for shorts. Like I said, if you were like overly focused on your small time frames, you could be looking for shorts when the lows came in. But if you understand where the big picture is actually coming from, then it tells you that that's not necessarily going to be a great trade. So the big picture is always more important than the small picture, kind of as a really good general rule. And then how do I reconcile the two? I don't reconcile the two. What I recognize is that if I'm taking any trades, I don't have everything lined up, right? Your best trades will come when everything is giving you the okay signal at the same time. And if I'm looking at, a chart that's got, one time frame that says, hey, this looks great and I'm ready to go, and another chart that says, hey, I'm not ready yet, that means that maybe it can go, but there's going to be a lower probability than if both charts are telling me that it's ready to go, if that makes any sense, right? So I'm not saying don't take the trade. I'm saying that you probably want to take the trade if you take it with less risk than you would otherwise if one piece of information is telling you that it's not time yet. So that's kind of how I do it. So for the trading that I did today, it was all real small because I never really got that market signal that I was looking for. Like, a couple of the day trades that I took today that I closed out, like AMC or Peloton, I took those trades really pretty small. I was not looking for home runs on those. I did not necessarily believe in them. I knew the market wasn't on my side, but these names have squeeze potential, relative strength, and volume. So I've got some things on my side. I got some things that are not on my side. So for me, those are opportunities where it's like I'm willing to get involved. I think I can make a few bucks for myself, and guess what I did? Though you shouldn't be overly results orientated in this business on one-offs, because it can be deceiving for you. It's all about larger pools of data. I can make a few bucks in these trades in the long run, but not everything's lining up, and this is not something where I should be maxing out my risk. So great question, Mike, and I hope that helps. From Michael Anthony, how many sectors were up today? I don't have the answer to that off the top of my head here. I know that when Pat posts his closing note into the virtual trading floor, as soon as the afternoon meeting ends, it usually contains all that data and all that information. So if that's the data information that you want, then you should get off the YouTube and into the virtual trading floor. I don't know that right now in front of me. I mean, we could just eyeball it. XLE is green, XLF is red, XLP is red, XLU is red, XBI is red, Tech is red. I look at staples already. Staples are red. So just with a real quick look, it looks like just energy. And I'm seeing that Mike H is saying just energy today, and Ryan saying energy. That's it. So there you go, energy. One. From Michael Anthony, PED and BRN are debt-free oil companies, which insiders have been buying up shares. Yeah, we were looking at this PED, I think, after earnings last week. No, maybe not. This looks very thin to me. $1.30 stock without much volume. Usually not what I go after. What about BRN? $3 stock also on very little volume. Buying up shares on PED is $26 million of cash with 125 wells. Yeah, so I appreciate you providing the information. It's stuff that we can put on our radar. I can tell you, for myself, these are usually not the types of names I like to go after. I like stuff with more volume, and I like stuff that's a little bit more expensive generally than these dollar type names. Yeah, appreciate the information. Mike's saying that you could also use FinViz as a resource, as a scanner, where you can get a quick overview of the sectors, and that's definitely correct. FinViz is a solid free resource for people, I think. Did Goodyear Tire report earnings? Yeah, missed by 15 cents. Report revenue in line. Fourth quarter outlook information. I'm not going to read the whole thing, but again, it's here in the VTF from Pat if you need to see it. Thanks, guys. From Paul asking about Rivian. Yep, Rivian was one on the list today. You bought at the open at $34.50 versus the lows. I love your execution price on that. I love your execution price on that, Paul. Volume looks solid. You got your risk covered, and then you got stopped out. Yep. I re-entered the trade versus yesterday's low. Okay, curious to know when. I re-entered the trade versus yesterday's low as it had built out a good base in prior days. Entry was 1035 bar. Entry was the 1035 bar? So you re-entered the trade versus yesterday's lows after it already broke yesterday's lows? That's the one thing I'm not following. You still have a small piece for a swing. It didn't, even though it didn't close well. Yeah, I don't know what happened with the selling into the close. So look, I like the idea of the name. I've got kind of two thought processes going on in my mind at the same time on your trade. One process is, so I love your initial entry, and I'm totally cool with the initial stop loss. The momentum is there, the volume is there. Went green first. It was doing everything we wanted to see from these stocks. So I really like it. You got your risk covered, great. You got stopped out. when it comes to the reentry, I, I almost feel like if your plan, like I'm a little concerned that you fought the stock, and maybe you didn't. Maybe you were patient, and this hammer came in, and you got back involved, and you had a real signal to be able to take the trade on a small time frame that corresponded with the big time frame. And you're like, all right, I'm going to give it to some of these previous days lows here on this bullish pattern that's building out. That would be great, and that's me giving you the benefit of the doubt. For me, if I want to do the opposite of giving the benefit of the doubt, like whatever that expression would be, it would be, if you really believed in this so much that you want to be buying versus the lows on these daily charts, this daily chart spot, why didn't you just do that with some of your stock to begin with? Why didn't you just get involved here with kind of a dual game plan, which I do a lot, where you've got some stock, probably a larger position that you're just giving the tighter risk to the opening low, and some stocks say, I love this daily chart in case the market's weak and this, opening low shakes out. I want to be able to have some stock and give to lows. So it kind of depends, and I think that what it depends on is your mentality and your psychology around the trade, which I don't really know. So if this was a really strong calculated rebuy, based on what you're seeing on the small time frame in conjunction with the daily chart, I love exactly as you did it, getting stopped out and rebuying. If it wasn't that, if it was, oh man, I still really want to be in this and they got me or whatever, and you're just kind of jumping back in off the daily chart, then I would say you should have just had that as part of your game plan from the beginning versus that low, because if it was a really good trade, it never would have given you that other stock. So versus the base low, which is 39.90, right? Right. No problem, Cody, because I actually missed your question, so I'm happy to do it. So yeah, Paul, that is my answer to you there, sir. Thank you, Michael, for the information. Yep, sounds good. Cody on semis. SMH tight inside day. Daily is showing a lot of improvement. Big picture, you want to see this thing, I think, back above 200. AMD, daily shooter, 2 inside days in a row. Still battling with that 60 that he was trying to hold as some support today. Could break in either direction. Technically, it's a bearish pattern. What's the weekly look like? Yeah, the weekly looks like just a bearish upside price correction, right? So that means that if you're taking this short on this break, you're like trading with the weekly chart. If you're taking this long here, then you're playing the fact that it's AMD and it came down from 165 to 55, and this bearish pattern is breaking to the upside and could easily give a snap back to $70 or $75 with some market cooperation. So I definitely think that there's two sides of the trade here in AMD, and two ways that you could be looking at it. NVIDIA has been the stronger one. I think if this NVIDIA clears above 140, it's looking great. I love that this NVIDIA gave an inside rest day today. Intel, we can look at. Intel holding 28. Also what you want to see. And what about like MU deteriorated a little bit? We want this MU above 55. That chart looks real sloppy to me. AMAT 90. I think I said in the morning meeting today when we looked at AMAT, I was like, I would much prefer for this to not go today and give another day of rest, let the moving average catch up. We got that. So AMAT's going to be on the list for tomorrow morning, for an inside and up, and then follow through break of 90. So yeah, so I think that they look constructive but mixed, and could really be trades in either direction depending on how they break and which side of the coin you're looking at, I guess. But really, there's two sides to the coin for these. Like AMD was the perfect one, I think, that we analyzed, and then whichever way it actually breaks should be your confirmation. I'm a little bit nervous about false breaks tomorrow, the day ahead of the Fed, either the upside or the downside, that then get negated or broken or whatever when the actual Fed comes out. Daniel's saying earnings tomorrow. Is that AMD you're referring to? I should know the answer to that already, and I don't. AMD, yep. That makes sense. So we might have to wait for that and a little more clarity then. All right, team. About 5 o'clock. Anybody else have anything for today, or shall we wrap it up? Okay, cool. Hope everybody held in okay and did well. You know, trickier day, but we saw that ahead of time. There was some okay stuff out there. A lot of it didn't get follow through. So that's why, you know, on days like today, execution and game planning is everything. On a day like today, where there's a lot of trades that broke well and then failed, the difference between you having potentially a positive day that's, you know, nothing to write home about, but you made a few bucks, and you going home negative is entirely about execution and game planning on these types of days. On days like, you know, Friday, or you know, you could have bought Apple anywhere and everything just works, you don't have to execute well to make money, though you would make more if you executed well. But these trickier days, which happen more often than not, it really is all about execution and game planning. So even though today was a tougher day and a boringer day or whatever it is, when you are doing your journals, when you're reviewing your work from today, you should really be focusing on, did I have good execution and did I have a good game plan? And if the answer to that is yes, then you probably made a few bucks for yourself today. If the answer to that is no, because it was a trickier day, you probably are down. It's a good day to do some work and some review, even if it's just an inside day. Have a great night, everybody. I'll see you tomorrow.